Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss Wall Street bank earnings, 21-year highs for the Nikkei before Japanese elections, UK economic data, as well as China's efforts to calm markets before the Communist Party Congress. But first, there are plenty of US companies reporting third quarter earnings, so we've highlighted a few. We've Netflix and Credit Suisse reporting on Monday, ASOS, Johnson & Johnson, Morgan Stanley, Goldman Sachs and IBM on Tuesday, American Express and eBay on Wednesday, Unilever, Philip Morris, Verizon and PayPal on Thursday, and we finish the week with Volvo, Daimler, General Electric, Procter & Gamble and American Airlines on Friday. And moving on to the economic calendar, over the weekend it's the IMF meeting and the G30 summit, which includes a speech from Janet Yellen. On Monday, China CPI, on Tuesday, UK and Eurozone CPIs, as well as US industrial production. On Wednesday, UK unemployment and wages, as well as the Fed's Beige Book. On Thursday, China GDP, China retail sales and UK retail sales, with little of note being reported on Friday. So Jasper, the big banks in the US are ones to watch this week.
Yes, really the big banks are kicking off the earnings season properly for the big S&P 500 stocks. And so banks are particularly interesting anyway, because if you look at the sector as a whole, the S&P 500 Banks Index has been up over 40% in the last year. So that's outperforming the S&P 500 in of itself. And so obviously we're coming up to almost a year since the US election. So what's interesting about those gains is that the bulk of those came just in the preceding couple of months after the election. So basically last year and just in the last month in the run up to this earnings season. So you can conclude that actually earnings expectations are pretty good for these banks. I'd say probably the only risk factor there potentially is that maybe the hurricanes, potentially even some of the political uncertainty, you could say, have disrupted lending activity over the last quarter. But when you're looking at these bank stocks in general, you basically got two considerations in mind. The upcoming earnings, which is obviously a direct consideration right now, this coming week, but also expectations for interest rates. And so I think it's no coincidence that over the last month, we've had a good run up in the bank shares. It's coincided with expectations for a rate hike in December going up decidedly. And so over the longer haul, whether those rate hike expectations are maintained will probably dictate how far these bank stocks have to go.
Right, okay. And so next Sunday, October the 22nd, that is, we have the Japanese lower house parliamentary election. What are the key details there?
So this is a snap election, so a bit like we had in the UK. It wasn't scheduled, but Shinzo Abe, the current Prime Minister of Japan, has called these elections basically looking to take advantage of current sentiment in Japan, which is quite favourable towards him. Now, his plans got a little bit scuppered because the mayor of Tokyo is very popular. No, I'm going to bodge her name, it's obviously Japanese, but Yuriko Koike. She has been a very popular candidate, and so it was at one point worried, there was a worry out there that actually maybe he wouldn't even be re-elected. But why does the politics play into Japan when we're thinking about markets? Well, it's because of Abenomics, obviously named after him, Abe, where we all know basically the policy in Japan has been to print a lot of yen. That's devalued the yen. That's boosted corporate profits in Japan. And not only have they been buying government and state bonds like other parts of the world, but they've actually been directly buying ETFs and shares in the Nikkei. So literally, if this policy ends, this Abenomics policy, under the leadership of a new prime minister, then there's going to be a big buyer removed from the Japanese stock market. So you can understand that's the reason why last week we saw a 21-year high in the Nikkei index. That's the highest it's been since before the Asian financial crisis even, because of this, because of the hope that he's actually going to make it through in the end.
Right, okay. So now it's a full week of UK economic data coming up. Do you see moves in the pound over that?
Well, so what will be interesting next week is I think that it's going to be where does the emphasis fall back in terms of the priorities of FX traders in the pound? Is it the political uncertainty about Brexit? Because over last week, I'd say probably the slightly more dominating factor was this risk of a no deal, increasing questions to Theresa May and Philip Hammond about planning for a no deal scenario. Are the Treasury doing anything? And so that increased risk, because the negotiations seem to have stalled a bit, was negative for the pound. But the economic data overall has been positive, particularly inflation. And so that's why the Bank of England is still thinking about raising rates because of this higher inflation. So the data point that I'll be watching, particularly next week, will be wages, because it's that wage push inflation that people are looking for to add to the kind of cost push inflation that we've had from the weaker pound.
Okay, great. And before we finish, it's China's People's Party Congress that starts on Wednesday. Can you tell us a bit more about that? And also, you were tweeting about China calming Chinese markets. How?
Yeah. Well, this is almost like China's fake version of an election, because obviously it's the Communist Party. They're constantly in power, but every 5 years they decide who's going to be the leader of the Communist Party, decide on the sort of power structure, if you like. So the expectation is that Xi Jinping, the current president of China, will retain his power for the next 5 years. But what they do is they kind of set out their economic goals, political goals over the next 5 years. So it's obviously still a somewhat planned economy in China, but we're interested in the market side of it. So what they set forth will be important, because China is still the kind of growth engine for the world. So it's all important from that standpoint. But as you mentioned, it is a controlled economy. So they have been directly intervening in the market. So a couple of things they've been doing is that the state-backed institutions have actually been directly intervening. So if there has been any big selling, they've been intervening buying. If there's been any big buying, they've actually been intervening and selling, so calming that volatility. And regulators have actually been taking measures to actually stop any big institutional share sales. So all that's done is just kind of decrease the volatility. So there's been a less than 1% gain in the last month or so, just because of that in the Shanghai composite.
Right, okay. Thank you so much, Jasper, and thank you all for watching. Don't forget to follow us on YouTube and Facebook by clicking on the links below.